is Ms. Schneider, Director of Trading Education over at MarketGauge. Trish, it's great to see you as always. Welcome back to Trade Talks.
Thank you. Nice to see you, Jill.
All right. What did you make of the Fed meeting and some of the commentary yesterday?
Well, I think it's great that it soothed the market rather than spooked the market, because they were very clear on the fact that they were going to do a taper. Of course, it's a slow taper, but the idea is to stop all the bond buying by the middle of June. Well, they said like June 2022. And then start looking at interest rate rises. But he also left himself open, as he would if the labor market cooperates. And of course, inflation right now, he feels is at his target, which is the best reason why he should start tapering. And then, of course, he also added that little comment about the government. If it goes into major default, there's not much we can do. So talk about covering your bases. He certainly did. What's interesting about the market today is that yesterday it rallied right to resistance. So today was very pivotal. And the market came in with buyers, fresh buyers, buyers over, especially in the Russell 2000 and in the financial sector, which has really been lagging. Obviously, semiconductors are continuing to do well. Buyers really all around, but most enticing is the fact that the transportation, which has been really beat up, is holding. That small caps, which have been going sideways, are trying. And even retail, which was lagging, is doing better today. So that's really what has to stay in the game at this point in order for us to feel like maybe we actually are going to improve economically.
Yeah, you know, it's really interesting because, of course, the beginning of the week, stocks globally certainly, you know, it took a hit with happening with Evergrand. Do you think with Evergrand, it has the potential to sort of send ripples through the global system should they default, or do you think China might come in and save it, if you will?
Well, that is definitely the question of the week. So my thoughts on the subject are, based on certain evidences, there's no reason to believe at this point that President Xi is going to save the day for that industry. He certainly has been very vocal about his goal, which is to really level that playing field and get rid of all poverty in the country, which means that something like Evergrand, which attracted a lot of wealthy investors, is not something he's interested in. Casinos, he's not interested in. It crashed. Video gaming, he limited how much kids could do. If you look at some of those video gaming stocks, they crashed. And then, of course, he's already been very vocal about the monopolies and breaking those down. All those stocks crashed. So there's no reason to believe that he's going to go in and save them. So I don't see evidence of that now, although there are plenty of people who aren't uber wealthy in China who are impacted by this, and we know that. So it's hard to say. However, I do think that if they let that crash, I don't know, I don't think 2008 was that far away that we can't say if there's any comparison to a real estate market collapsing, that there wouldn't be spillover all over the place. And the raw materials that are involved in infrastructure and building aren't doing that well comparative to some of the other commodities, like the soft commodities, for example. So
right.
I'd be cautious about that, yes.
Yeah, which is so interesting because you always talk about the transportation sector. Even though we're living in a more digital world, it still really is a key sector to watch. And it's kind of a great economic indicator, tells you a lot what's happening globally. So when you're looking at transportation, what's key for you right now?
Well, right now, if we just look at the actual IYT, which is the best one to use for the basket, because that has FedEx and all the railroads, et cetera, et cetera. Well, we know FedEx actually just reported earnings. It didn't do too well, and now it's trying to come back. But you got to look at that IYT over 250 right now. It's traded right up to it today. So what that tells me is that the rest of the market either is running ahead of it and is a little bit too roseate in the face of all these bubbles around us, or it's getting ready to fuel higher because it feels, the market at least, and if the market is smart, then perhaps it's true, that the Evergrande situation really won't have the spillover, in which case we can go back to enjoying our upcoming holiday season, consumers will go out, packages will get out, things will get delivered, FedEx stock will recover. Some of these railroad stocks like UNP, United Pacific, yeah,
yep.
I think so, is also going to recover. And that's really what we're hoping for, because that's probably the best opportunity in the market for the next several months if.
Right. And so let's go back to the debt ceiling for a moment, because We're dealing with Evergrand. We're dealing with the debt ceiling. We know that's going to be contentious, and it seems as if the market, for the most part, is largely shrugging it off for now. But we saw the implications in 2011 when there was another stalemate, and I'm kind of surprised to see. We look at the market now. The average is up. Almost about doing well today. And I can't say my quotes from the side of my eye up here.
It's over 500.
Right, so they're doing well. I mean, I see a lot of green behind me here. But
Yeah.
are you surprised by the way the market just continues to digest this?
Well, people say, oh, with the number of retail investors that we've had coming into the market, the buy the dip crowd is keeping this market alive. And I've been around long enough to know, and you just mentioned 2011, that's kind of a naive situation. Every single major crash we've had over the last several years is after the market has made new all-time highs. And we're not even at anywhere near all-time highs at this point. So I would say the complacency factor is a little bit concerning right here. And we're buying stuff today, mostly, like I said, following the sector rotation into the financials. We're still looking at the transportation. We want enough proof. We're also looking at some emerging markets, and we're also looking at some of these soft commodities. But I'm being really careful here. I don't know how they're going to resolve this debt crisis thing. The Republicans seem to think that the Democrats can solve it without raising it. I haven't heard any plans on the table from either side. And if they block it, right, 2011, we got downgraded then. That would not be good. So yeah, it's a really interesting situation. Like I said, we're navigating around these bubbles, but right now we're navigating. And if price rules, you kind of have to live under a rock and say, okay, and just make sure you have the right amount of risk parameters in there and be very nimble if things turn around.
All right, classic advice, regardless of what market you're in. Mish, great to see you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.